Ladies and gentlemen, good day and welcome to Hindustan Foods Limited Q1 FY'25 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touchtone phone. I now hand the conference over to Mr. Samir Kothari, Managing Director of Hindustan Foods Limited. Thank you, and over to you, sir.
Thank you. Good afternoon and welcome to our Q1 FY'25 earnings conference call. I am joined on the call by Ganesh Argekar, Executive Director, Mayank Samdani, Group CFO, Vimal Solanki, Head Corporate Communications, and SGA, our Investor Relations Advisor. I hope everyone has had a chance to go through our updated earnings presentation uploaded on the exchange as well as our company website. It has been an interesting quarter for us here at HFL, where we did end up posting the highest ever turnover and profitability numbers, but still felt that thoda hai, thodi ki zarurat hai. Thanks to the heat wave and the extended summer, some of our product categories, including ice creams and beverages, performed exceedingly well, though in some other categories, we continue to see tepid volume growth and also deflationary pressures. Having said that, and in spite of me promising my team not to use the word green shoots, I have to say that we are witnessing some volume growth recovery. It's a little early to judge whether this is a revival of the consumption demand or a temporary blip caused by the elections and a base effect of the previous year. Suffice to say that we are cautiously optimistic about the future. While the FMCG sector slowly regains its momentum, we continue to be extremely bullish about our foray into footwear and are working hard on integrating the business and building a foundation to grow. In summary, the macroeconomic environment, particularly the inflation scenario, continues to present a complex puzzle, and we are working hard to make our business resilient to any shifts in the outside environment. We are striving to build a model where these shifts might affect our top line, but our bottom line should not be undermined because of these fluctuations. We are doing this by winning new customers, diversifying into new product categories, while continuing to invest in the FMCG business to be prepared for the return of the consumption demand as and when it happens. With this, I will now hand over the call to Ganesh Argekar, our Executive Director, to brief you on the operational highlights.
Thank you, Samir. Good afternoon, everyone. I will now walk you through the operational and business highlights for Q1 FY'25. As I mentioned in the last podcast interaction, the integration of Bhaji and the shoe business is a mammoth exercise involving regulatory approvals, integration of systems, processes, and more importantly, integrating large teams spread across multiple locations. While this quarter continued to be affected by these challenges, I am pleased to inform you that the integration of healthcare and wellness plant in Bhaji is progressing, and it clocked the highest production in July 24, last month. We have received most of the regulatory approvals and have resumed exports to UAE, Australia, Africa, and in addition to the domestic business. The only approval that is pending is from the Russian FDA that is expected to take another year, thereby delaying exports to Russia. Additionally, the integration of the North shoe factory is progressing and we expect it to be completed by the next quarter. In the meantime, we have started operations in the new sports shoe line set up in the south and are confident of ramping them to the full capacity by Q3. As a sign of a commitment towards the shoe business, the board has authorized an investment up to 50 crores in the wholly owned subsidiary KNS Shoetech by way of subscribing to the rights issue. As mentioned by Samir, we continue to invest in our existing business and all the previously announced brownfield expansions at various sites including Hyderabad, Silvassa, Lucknow are progressing quite well. As far as new sites are concerned, the new ice cream factory that was being set up in Kundli, Haryana has been transferred to Nashik due to certain operational issues, and this has led to some delay in the project. Production is expected to commence by March 25, that is the next season. With this, I will now hand over the call to Mayank Samdani, our Group CFO, to take you through the financial results for the quarter ended 30th June 24. Thank you.
Thank you, Ganesh. Good afternoon, everyone. I would now run you through the financial performance for the quarter that went by. We achieved the highest quarterly turnover on a consolidated basis at rupees 670.9 crores, having grown at 40.4%. This was on the back of the seasonal uptake of ice creams and beverages, and in addition of the few businesses at Baddi and the new shoe business. It did, however, fall a little short of our expectations, as we saw some fall on the commodity prices in the quarter, and the fact that Baddi and the shoe factories are still in the process of being integrated and have not ramped up to the level that we would like. These factors did lead us to being able to post our highest ever PBT numbers of rupees 36.2 crores. The continuing integration of Baddi factory and the shoe units, which have led to the higher growth in our EBITDA numbers, a growth of 47%, than the PBT numbers, which was up only 23% in comparison, since we were not able to completely absorb the additional depreciation and finance cost of these businesses. Our PAT for the quarter was also at the historical high of 27.2 crores, having grown at 16.5%, despite being affected by the higher tax incidence in this quarter. The effective tax rate is increased to around 25% as compared to 20% in last year. We believe that the effective tax rate will be around 25% here on. With this, I would like to open floor for the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Faisal Hawa from HG Hawa. Please go ahead.
Samir, what is the kind of progress we are making on the private labels to be supplied to, say, modern retail or even, for e-commerce companies? I believe we had a person who was handling it standalone. And is it now even 5% of our revenue totally? And second, within this footwear space, how are these BIS norms going to affect us? And will it lead to a lot of work coming in for contract manufacturers of footwear? And is the existing industry even geared up to handle the kind of huge influx that may come of orders? And are the shoe companies still facing some kind of shortages in replenishing their showrooms?
Good afternoon, Faisal. First, as far as private labels is concerned, we continue to work with most of the online as well as offline retailers. As I mentioned earlier, that business is a very strategically important business for us. But from a volume perspective, or for that matter, from a value perspective, it continues to be very, very small. And that's probably representative of the market in general. When we're dealing with the larger brands or we're dealing with the larger FMCG companies, obviously in terms of scale, our business on private label continues to be very, very small. However, the number of customers in private label has increased tremendously over the last few quarters, including a bunch of B2C brands and online as well as offline retailers. The another interesting aspect of the private label business in the last quarter has been that we have successfully started work with some of the online retailers for our shoe business as well. And in some of the online as well as offline retailers, you will now see shoes which are manufactured by us both women's footwear as well as men's footwear. Again, when you compare that to the larger brands of, let's say, a Bata or a Puma or any of these guys, it's extremely small, but we've definitely started work with those guys as well. Speaking of the shoe business, you are absolutely right. BIS is a major tailwind as far as the shoe business is concerned. I think we've been extremely lucky to be able to get into the shoe business at a time when manufacturing capacity is extremely short. Most of the brands who are in the country are redrawing their manufacturing footprint, are redrawing their supply chain, moving away from imports, trying to increase the production in-house. And of course, one of the bigger beneficiaries are contract manufacturers like us. If I have to make a statement as far as the manufacturing industry or the manufacturing ecosystem is concerned, the short answer is no, we do not have capacity enough to absorb the entire demand which is getting generated because of BIS and because of the import duty. And as a result, brands will continue to import. August is the date from when BIS has been implemented. People have stocked up on their imports in view of this, because we do not have the capacity as a country to actually fulfill the demand that the shoes sector has in the country. So from that perspective, I think we are in a great position where in spite of all the integration issues that we are facing in the shoe business, we continue to perform reasonably well.
And one more thing is that what is the kind of, can you give some value to the total imports that these large shoe brands like Nike, Puma, Adidas would be making at this point of time into India? That's one. And second question is addressed to Mayank. If the entire shoe contracting, all our facilities are working to say 90 to 95% capacity utilization, would it be a right statement to make that our total EBITDA margin of Hindustan Foods would increase by around 1%?
Okay, the first question, Faisal, I actually don't have any published data to talk about. It's more anecdotal, and from an anecdotal data, I can tell you that at least as far as the high-end shoes are concerned, you mentioned Nike as one of the brands. Majority, I would say nearly 80% of the shoes are actually imported. On the other hand, in the mass market and slightly lower level, there's more of indigenization happening. At the top end level, the ecosystem for making these high-end shoes is just about developing in the country. And I think we still have at least a few more years before we become capable enough to be able to handle the entire range of shoes from perspective of high-end shoes to the mass market. But in terms of numbers, I really don't have any kind of published data of how much is imported and how much is domestic. Now, as far as the financial question is concerned, I don't know if Mayank has got it or he wants you to repeat that question.
So, Faisal, the turnover of the shoe business vis-a-vis our entire business will be around 7 to 10% of the entire business. So EBITDA-wise, surely the EBITDA will increase with the better margins of shoe business, but 1% I am not sure about it.
Okay, thank you. I appreciate your answering my questions.
Thank you. Our next question is from the line of Akhil Parekh from B&K Securities. Please go ahead.
Hi, thanks for the opportunity and many congratulations to the team for delivering a good set of numbers. My first question is on the OTC pharma business. It's a big acquisition which we have done, but we have been a bit reluctant to highlight, the kind of potential sales this manufacturing unit can do. If we can throw a bit more color or give more details around this business, and prior to acquisition, how big was Russia as a percentage of food? of the segment.
Sure. Thank you, Akhil. As far as the OTC pharma business is concerned, it's not that we've been reluctant to share the data. We've been quite forthright and transparent in terms of what we are doing there. The difference is that it was a factory which was owned by the brand owner, and as a result, any kind of value numbers from a perspective of what they were doing as far as turnover is concerned versus what we will be doing as a contract manufacturer would not be a right comparison. We would be comparing apples to oranges because their turnover would include the margins, etc. From a volume perspective, I think we mentioned this earlier that we have an anchor tenant agreement with our customer there, where nearly 60-65% of the capacity has been underwritten by our main customer. And like Ganesh was mentioning in his opening remarks, we have more or less been able to integrate all the other requirements in terms of regulatory and have achieved, I think, at least a decent number as far as domestic production as well as export to all of the other countries that Ganesh mentioned. Russian FTA is one particular product which is getting exported to Russia. Unfortunately, because of the various political as well as other issues in Russia, that's taking a little bit of a time. It's one particular product out of probably around 20 odd products that we make. In terms of value, because it's export and because it's a high value item, it's reasonably significant in terms of the turnover. But from a profitability perspective, given the anchor tenant arrangement that we have, we don't see that affecting us too much. Again, just to repeat in terms of the volumes, again, like Ganesh mentioned in his opening remarks, July of this year, which was the previous month, we hit our highest turnover in Baddi. I am reluctant to talk about the value terms of what the turnover of that factory was, but in terms of volumes, that's the highest that factory has produced since December of probably 2023. So in the last nearly 2 years, that's the highest quantity that we have produced. So I think, we are reasonably confident about the integration. The Russian FTA continues to be a dampener, but I don't see that affecting our bottom line, even if it does affect our top line to a certain extent.
Sure. This is helpful. And did it contribute to the top line in 1Q of FY'25, the OTC pharma business?
I'm sorry, Akhil, I didn't get that.
I was saying the OTC pharma plant, did it contribute to some extent during the first quarter of FY'25, or it will start contributing from July?
No, we started production we actually have been trying to run that factory since January of this year. It continues to perform. It's not that the factory is shut. It's just that it has taken us a lot of time in terms of approvals and ramping up the production, because obviously being OTC pharma products, we can't produce unless we have the licenses in place. And again, like Ganesh mentioned, most of the licenses are now in place, and that's why while April, May and June, it did contribute to the top line. And in case of July, it was higher than what it did in the previous month.
Okay, great. This is clear. Second, of the sports shoe business, again, the facilities which we have acquired in North, have they contributed to in the sales in the first quarter, or it will start contributing from second quarter?
So again, Akhil, both the factories, right, Baddi as well as the sports shoe facilities have been acquired as a going concern. So while we've been facing integration issues, whether it is related to systems, processes, or people in case of the North shoe factories, or in case of regulatory issues in case of Baddi, it's not that the production was zero. It's not where we would like it to be. We expect, and which is why I in my opening remarks I said thoda hai but thodi ki zarurat hai. We would definitely prefer and like it to be a little bit higher than what it is. And we are saying that I think especially as far as Baddi is concerned, I think this quarter we should be at a decent level, and with the shoe we are hoping that from Q3 we should be where we want to be as far as the shoe business is concerned.
Okay. So is there a slight delay basically by a quarter for this shoe business?
Depends on how you define ramp up. I mean, if you talk about this quarter's performance of the shoe business, we have already exceeded the turnover from at a run rate basis from what we acquired it at. But like I said, thoda hai, but thodi ki aur zarurat hai. We are confident that we should be able to ramp it up further.
Okay, great. And just two more questions before I get back in queue. Last 5 quarters, if I look at it, I know EBITDA margin is not the right metric to look at, but has sustainably been above 8% kind of thing. So is it largely because of the price deflation what we have seen, or is there some change in the product mix or some change in the business model where, probably the shared model is contributing more to the top line?
So while I'll ask Mayank to get into the details of the question, let me just repeat my caveat. Margins is not the best way to look at our businesses. The reason why in our commentary, or rather in Mayank's commentary as well as now in the investor call opening remarks, we talked about EBITDA margin. That's because of the seasonality. We wanted to ensure that people like you who are following the company understand the effect of seasonality as far as this quarter is concerned, while also appreciating that Baddi and the ShoeTech business continue to drive down our PBT and PAT numbers. But I'll let Mayank explain that to you in detail.
Hi, Akhil. So you are correct in both the sense that the EBITDA margins from last 5 quarters is over 8% mainly because of the deflationary trend which is there. So the deflationary trend is still there. We are not seeing that it is sustained yet. So the margins are better because of deflation, and also the shoe business and the new businesses which are there are better in terms of margin. That is why we are seeing some blip in the EBITDA margins.
Sure. That's great. And lastly, in press release, we have not mentioned that, we continue to, guide for that 4,000 crore for top line for 25. Do we still maintain that, or there might be some deviation to that number?
So in the press release as well as in the opening remarks, what we've said is that frankly, we are not understanding what's happening on the inflation front. I'm sure people like you who look at macroeconomic numbers more than we do will understand it better. In some categories, we continue to see deflation, and in some categories, we are beginning to see inflation coming back. Like we mentioned time and again, our top line is a complete pass-through, especially as far as raw materials and packing materials is concerned. So from that perspective, if most of our prices go up, volume, even at the same volume, we'll end up showing a higher turnover, while it may not affect our bottom line. So the reason why we've stayed away from mentioning about the 4,000 crores is the actual answer is we don't know. In this past quarter, it's been the volumes have ramped up to the level that we want. The volumes actually have ramped up to a level which should generate at normal levels generate a turnover greater than 4,000 crores. Which is why we've been forthright in saying that our bottom line numbers should not get affected by this inflation deflation. However, as far as the top line number is concerned, I really don't know how the macroeconomic conditions are going to work out in terms of petrochemical prices or agricultural commodities.
Sure. That's helpful. Best wishes. Thank you.
Thank you. Our next question is from the line of Nirav from Birla Sun Life Insurance. Please go ahead. Hello, Nirav sir.
Hello, can you hear me?
Yes, sir. Please go ahead.
Thank you for this call. So I just wanted to understand a little more on details on the operation issues that you all faced, that you all then made you shift the ice cream plant from Haryana to Nashik. So, and will that have any impact on the growth, on the revenue target that you all have for this year, and any change in the capex for the plant for this as of now?
So, sure. So, Nirav, the factory which was supposed to come up in Kundli I think we had mentioned it in a couple of quarters ago that we had signed an agreement with the Central Warehousing Corporation for that factory. Because of certain statutory reasons, when it came to giving the permissions for setting up the factory, the authorities suddenly realized that while the CWC Act permits them to do processing, it actually does not permit them to do manufacturing activities within their premises. This nuance between processing and manufacturing is what caused us to relook at that entire arrangement, given that we would have been investing more than 100 crores in that site. We really did not want to get into a situation where the viability of that or the actual existence of that site is dependent on the definition between processing and manufacturing. So in consultation with the customer, we took the decision to relocate that factory from Kundli to Nashik. And I think, yes, it will affect the project is probably going to get delayed by a couple of months. We started the groundbreaking in Nashik last month, and construction for the facility has started. We are reasonably confident that we should be able to start production by March, which is what the season is. But if you look at purely the financial year, yes, it has gotten delayed by, I would say, at least 2 months.
Okay, does it change the annual target? I mean, because we were expecting revenues to start coming from the fourth quarter from this plant.
Not to a large extent. Again, I just want to repeat what I discussed with Akhil in the previous interaction. That revenue target to us or for us would be a lot more dependent on the inflation deflation of various commodities. As far as the ice cream business is concerned, given that we were earlier expecting it to start production in January and it would have taken a couple of months to ramp up anyways, I frankly am not sure that it would make such a large dent or it would make such a large difference for this financial year. Given that now that ramp-up period will happen between March and April, definitely it will make a difference of 1 month, 1.5 or 2 months, but that's during the ramp-up phase. So no, if you have to look at the turnover, I think the bigger fear or bigger downside risk is more about inflation deflation rather than about the delay of the ice cream project.
Sure. Thank you so much.
But that's purely, again, Nirav, I'm repeating because it's unfortunate that we have to clarify this in every call, but the top line number to us is literally a pass-through. And we are reiterating in our press release as well as in our opening remarks, we do not expect that the bottom line numbers should get affected by any kind of inflation or deflation that happens as far as the top line is concerned.
Understood. Thank you so much.
Yeah.
Thank you. Our next question is from the line of Nitesh from Christ Capital. Please go ahead.
Hi. Thank you for the opportunity and congratulations to the HFL team on stellar revenue growth during the quarter. So my first question is on the footwear business. So could you share, how the business has been ramping up and how much has it contributed to the revenues in this quarter? And how much do you think it will contribute in FY'25?
Nitesh, we generally avoid trying to give specific numbers of any of our factories. As far as the footwear is concerned, I do understand that it's a new category, and frankly, even for us, we are debating about whether we should look at it as a separate segment, separate division, and start declaring numbers about this separately. But right now, I'm unable to do that. Let me come back to you in a couple of quarters once we are clear on what direction it is taking, and then maybe we'll start disclosing numbers for the footwear separately from our existing business. As far as how the business is ramping up, I'm going to just ask Ganesh to give you a ringside view of what's happening.
Hi, Nitesh. Hi. So the shoe business, we have been trying to integrate this totally. It's like we All our factories are connected with a common ERP program. We have a strong IT team in place. We also take help of external consultants for developing programs, customization of software, as well as reports. The integration is taking a little bit of time because of people, because of systems. Just imagine the number of items that we deal in. I mean, there are more than 50,000 RMPM masters, more than 3,000 vendors who are supplying to the factory. The set of operations are different in different factories. One factory is manufacturing. I would say the set of operation would mean stitching, cutting, assembly, sole fitting, stock fitting. So the integration part itself is taking a bit more time than expected. However, we are confident that in the next coming quarter, we would be able to integrate fully and we should be online for the target.
So we expect, steady state from Q2 onwards?
Q3 would be the right, time where I would confidently say that we should be able to, ramp up production and integrate everything, all systems, people, everything in place.
Understood. And as you mentioned,
Nitesh, I'm sorry to interrupt, but steady state is probably not the right adjective, because while it will be steady state for the northern factories, the southern factories are new and will be ramping up between Q3 and Q4. So we actually expect for the turnover to grow from Q2 to Q3 to Q4. I would say at the end of Q4 is when our existing capacities will reach a steady state performance. Having said that, given that we are extremely bullish about this segment, I'm hoping that by Q4 we would have allocated some more capital to expand capacities in this segment.
Okay. And as you mentioned that the footwear business is in the ramp-up phase. If it was completely all the integrations were done, how much of a margin improvement should we expect?
Okay, difficult to say. I'm going to very nicely pass the question to Mayank and let him deflect this. How much of a margin?
Nitish. Hi, Nitish. So as in one of the earlier questions, I mentioned that for this year, the overall percentage of sales which footwear will do vis-a-vis the entire operation will not be very significant for this year, but the margin profile is better. So as of today, I am little reluctant to give you the margin betterment number. Probably once in Q3 we can give you these numbers when we are ramped up to certain capacities.
Okay. Just on the revenue growth in the quarter, just wanted to understand, how much of this revenue growth is coming from seasonal products and how much of this demand do we see, to be recurring over the next few quarters?
So again, can't discuss on percentages because of obvious reasons, but a large part of it is got to do with seasonal. A large part of it has got to do with the integration and the ramp up of the shoe business, which was not there in the previous quarter, as well as Bati, which is now beginning to ramp up as well. Which is why we try to go at length in both the commentary as well as our opening remarks to say that it's a combination of a bunch of things as far as top line is concerned. It's a combination of extended summer. It's a combination of extreme high temperatures that both the seasonal products, ice creams as well as beverages, have actually had a record year. As far as beverages is concerned, I think since we've acquired the factory, which was way back in 2019-20, I think, this is the highest production that we've ever done. As far as ice cream is concerned, again, in the last 3 years that we've set up this facility, this is the highest production that we've ever done in ice creams. The shoe business, of course, is completely new. It was integrated on 1st of April. So the entire turnover which has come in from shoe business is not comparable to the previous quarters or to the previous year because it did not exist. As far as Bati is concerned, while in the previous quarter we did continue to have Bati, in the previous year, Bati was not part of the comparable figures. So as a result, a large part of the growth has come on account of these four things. A large part of our EBITDA as well as PBT, PAT numbers have been affected by these factors. And again, I think we tried to explain that, or at least Mayank tried to explain that about how our EBITDA numbers have changed as compared to PBT, PAT, etc. Happy to elaborate on that because I think that's a critical takeaway for us from this quarter as far as the financial numbers are concerned.
Okay. So, that leads to my next question because our EBITDA growth is 44% and our PBT growth is around 23%. So firstly, is our level of depreciation and finance cost at around 20 crores? Is this a steady state now?
Yeah, Mike.
Yeah, so both the finance cost and the depreciation is 20 crores for this quarter. And till we do the next round of investment, this will be mostly the steady state now.
Okay. And by when do we expect, financial leverage playing out and, reflecting in better PBT growth, more, closer to this EBITDA growth?
So, Dipesh, if you look at our business model, right, as far as dedicated factories, etc., is concerned, from that perspective, we do not take on any kind of leverage as far as those are concerned. As far as financial leverage is concerned, there are two things playing out as far as the numbers is concerned. One is we've raised some money in the month of December. We've not completely deployed that money, and as a result, our ROEs will continue to get affected or remain depressed till we deploy that entire sum of money. As far as the shoe business is concerned, which is a shared manufacturing facility, that's where both operating as well as financial leverage will come into play. As the shoe business and Baddi ramp up, we are hoping that the PBT and the PAT numbers will start improving in sync with the EBITDA numbers. Frankly, that's the reason why we've gone at length to explain that while EBITDA has increased by 40 odd %, our PBT has not increased in a similar proportion because Baddi and the shoe business continue to underperform as compared to our expectation. We expect that in the next couple of quarters that should change. And as far as the PAT is concerned, PAT will lag as compared to the previous year because of the change in the taxation rate. And I think it will take one full year for that to be washed out because the whole of last year we were at a much lower tax rate as compared to this year. Going ahead, however, our effective tax rate is expected to be 25%. So from a steady state perspective, that's where it should be.
Okay, thank you. And just the final question on the last call, you had mentioned that there are two assets which Vanity Case has, which we are thinking of planning to incorporate into Hindustan Foods. So, is there any update on this merger?
So there was one operating asset which is a Nashik one. Another one was the holding company which we are reverse merging. So the operating asset is only one which is a Nashik unit. So we will file the application to SEBI and the stock exchange in the month of September, and we expect that NCLT process will take another year to complete. But so we are hoping by September 25, the entire process will be completed.
Okay. This is the plant which caters to D2C brands mainly, right?
No. This is the
plant where we are manufacturing certain dry mix powders for a large customer. This is also the plant where we are relocating now the ice cream project.
Okay. Thank you so much.
Thank you. Our next question is from the line of Mayur from Wealth Manager India Private Limited. Please go ahead.
Hello. Am I audible?
Yes, sir.
Good evening and thank you for taking my question and congratulations on the recent set of numbers. Actually, I understand that you would not be very comfortable giving all the percentage growth for categories, but just to understand how has the core FMCG segment performed? There is a lot of understanding that the rural is coming back at the OEM levels and things are improving. So at your end, how have you seen the core FMCG category growth? Is it closer to now double digit, or is it still very low in terms of growth, or is it flat? How has it performed?
Mayur, in my opening remarks, I did mention that I will not talk about green shoots. And the fact of the matter is, the answer is we don't know. Yes, you're right that there's been some amount of euphoria coming back. There's some amount of good numbers coming back as far as rural demand, etc. is concerned. We really don't know, and it's too early to say whether this is a structural return of the consumption or this is just something which has been paused because of the money of the elections, as well as because of just the base effect of the previous years. I think you'll have to give us a couple of quarters more to understand what is happening. And frankly, the commentary from our customers will probably be a better indicator of what is happening on the rural demand, because please appreciate that we are the secondary network effect of that, right? I mean, when you have rural demand coming in, they'll be the first beneficiary. They'll start selling more. Once they start running out of capacity, that's when they would come to us to set up new facilities. And there will definitely be a lag. So the day you start seeing the CEOs of our customers raving about the rural demand, the next quarter we will start raving about it as well.
So outlook is one thing. Samir, I just wanted to know how has it done in the quarter gone by? Has the growth picked up? I understand you will not be ready to commit whether it's a structural change or not, but how has it happened in the quarter?
So in case of some categories, it has definitely picked up. In case of some categories, it has not. I really am unable, and given that we work with so many categories, right? It's very difficult for me to make a generalized statement. I mean, we deal with products. So for example, beverages and ice cream have done tremendously well. Is it because rural demand came back, or is it because it was just too hot? Incidentally, within the beverages segment, some of our customers did well. Some of them actually did not do well. Now, is it because those customers were... Sorry.
I meant the FMCG outside the seasonal products, sorry. I understand those are FMCG, but I meant outside the seasonal, which we know that it has done very well, right, in the quarter gone by. But I'm saying outside the seasonal products, the FMCG, core FMCG.
Mayur, difficult to comment here. I really do not have that kind of data of being able to make a comparison, and I really do not want to go out on a limb and say that yes, Achhe Din are here, or that Achhe Din are coming, or that they are not coming. Either way, I don't think we have enough information right now.
Okay, so last question from my side is, you in your commentary as well as opening remarks in the press release, everywhere you have been talking about this inflation, deflation impact. And you've been trying to explain, is it too much on the top of the mind, and which are the categories which you feel, why is it so much of a, point to be understood that, is the impact in the coming quarters so huge that we need to worry about the impact of inflation, deflation on your sales numbers? Because I don't remember this as such a significant element, as a point of, on the top of the mind, and which categories if you would like to call out?
Mayur, if you look at the way we operate, right, and if you look at our business model, you will understand why we keep emphasizing about this. Frankly, the question that you're asking is exactly the reason why we are spending so much mind space on this. What people need to understand from our business perspective is that the top line numbers for us is completely governed by the inflation deflation, while our bottom line number remains constant irrespective of the price movement on our top line. The reason we keep saying this is because people keep asking us about whether 4,000 crores will happen, 5,000 crores will happen, what's the margin as far as PBT to sales is concerned. If you look at and in our previous interactions, we mentioned that if there's a deflationary environment, which was the case 2 quarters ago, our margins improved without us doing anything. While as an analyst you might appreciate and say that the management has done tremendous work to improve the margins, the fact of the matter is the margins improved just because our top line reduced. So that's the reason we keep emphasizing this so many times, because unfortunately I don't think people appreciate that our business model is slightly different. We are a contract manufacturer, and within the contract manufacturing business, nearly 80 to 85% of our business comes from what we call dedicated manufacturing. I'm happy to take this call, this discussion offline, because we've elaborated on our business model in our investor presentations as well as other interactions. But I'm happy to get on a call with you and explain to you again.
I understand. Sorry, it's a clarification, not a question. When you look at the CPI...
Hello, sir. Mayur,
It's a clarification, not a question.
Mayur,
Okay.
please.
Thank you, Mayur.
Okay.
Yes, sir. Thank you. Our next question is from the line of Nihar Mehta from Bay Capital. Please go ahead.
Hello. Am I audible?
Yes, Nihar, we can hear you.
Yeah. Hi. Thank you for taking the question and congratulations on continued growth. I just had one clarification on the increase in employee expense and other expense. So is it only because of the integrations of shoes and OTC business, or is there some other element to it?
The employee benefit expense is increased majorly because of the shoe business. As we have mentioned I think in the last interaction of investor call, we are told that we are taking around 4,500 people with the business. So this is the employee cost is the major cost there, which this will continue to be there in next quarters also.
Okay. Thank you. That's it from my side.
Thank you. Our next question is from the line of Devansh from Safe Enterprises. Please go ahead.
Yeah. So thanks for the opportunity. So just a quick question. One is on our shoe manufacturing, like we did highlight, there's a lot of demand around there. There has been some challenges in integration. Can you just elaborate a bit more on that? And another thing is, when do you expect it to fully ramp up? What are our internal targets right now? And second question is, sir, with respect to Baddi, there are three parts. One is the anchor tenant model. One is for dedicated manufacturing for your racket. And within that, there is some challenges with Russia. And another thing is that new customer acquisition, which we have to do over there to fully ramp up. So what is the progress there right now? How are the new customer acquisitions progressing? So if you can just elaborate on these two questions.
Sure. Devansh, as far as the shoe business is concerned, I think Ganesh spoke about it. We expect from Q3 for at least the north factories to ramp up to their stated capacities. The south factories will continue to ramp up further between Q3 and Q4. Assuming that we're not doing any more capacity additions, Q4 would be the steady state number as far as the existing capex that has been invested in the shoe business is concerned. From a target perspective, I think I answered that earlier for someone. It's a little, we ourselves as a management are a little confused about whether we should start disclosing the shoe business numbers separately or not. Bear with us for another quarter or so. Let us try and understand how this business is shaping up and how different it is from our existing business, and whether it deserves a special mention in terms of a separate category. For the time being, all I can say is that we are hoping that by Q4 we should be able to be fully ramped up for our existing investments as far as the shoe business is concerned. As far as Baddi is concerned, you are absolutely right. One of our customers is our anchor tenant in that facility. As far as the ramp up for that anchor tenant is concerned, other than Russia, all the other markets, including the domestic markets, have ramped up to the capacity that has been committed by that customer. So from that perspective, again, we are reasonably confident about meeting our bottom line guidance as far as that anchor tenant customer is concerned. For getting new customers, that's an ongoing process where the gestation period, because it's an OTC pharma site, is slightly longer than let's say our regular FMCG sites or any of the other home care sites. Purely from a regulatory perspective, even if we have to launch, and we are currently working with a couple of customers on new product launches, just the stability and the formulation trials and the regulatory requirements can take as much as 8 months to a year. So I don't see us being able to sign on any new customers in this financial year, and that's what we had built in even in our numbers, that we do not expect any new customers to come in this financial year. If they do, we will definitely come back to you, and that frankly would be a bonus if it happens.
Okay. Thanks.
Thank you. Our next question is from the line of Kapil Zawari from MK. Please go ahead.
Yeah, this is Kashyap Zaveri from MK Investment Managers. Congratulations, Samir and team, for excellent numbers for the quarter. Just few clarifications I need. One, on this ice cream factory, when you shift from, let's say, Haryana to Nashik, Kundli to Nashik, your customers also need, product around that area. So in that case, ideally, he would have planned something for demand which is in and around, Nashik area. So, how does that work for him now?
Kashyap, brilliant question. You're absolutely right. Ice cream being such a sensitive product as far as transportation cost is concerned.
Yeah.
You're absolutely right in terms of that. Without getting into too many details, which I can't, obviously for confidentiality reasons, let me tell you that obviously this decision was done in consultation with the customer. The customer has to sign off because it's a dedicated factory. So unless the customer is okay with the site, we obviously cannot choose any of the sites. Maybe, and nobody can predict the future, but maybe we might look at a couple of factories coming up from a geographical location perspective. But that's something we don't know.
Sure. Second, just a clarification. You mentioned that there has been some deflation in some of the commodity prices. So in that 44% value growth 40% value growth in the top line, volume growth should have been slightly higher, right? I mean, I don't need a number. Obviously, it's difficult because there are too many businesses to handle, but overall.
But you're absolutely right. I mean, I was explaining earlier. So the shoe business, for one, was not there in the previous quarter as well as in the previous year. So that's a completely new addition to the top line. The Baddi factory, while it was there in the previous quarter, was not there in the previous year. So that's a complete addition when you look at Y-on-Y numbers. And obviously, both of those businesses add to the top line in terms of value as well as volume.
Sorry, Samir, sorry to interject here. My question is slightly different. I'm saying this 40% value growth also includes all this, but what I'm asking is that our volume growth should be higher than 40% for the quarter, including all the businesses that we have added in last 4 quarters. What is that 40% value growth, I'm asking?
So it's not comparable, right? I mean, we're manufacturing, let's say, 100 pairs of shoes in this quarter, which were not there in the previous quarter. So there's a volume growth of those 100 pairs for sure. Similarly, let's say we manufacture 100 tablets in Baddi. Again, if I look on Y-on-Y numbers, we did not manufacture 100 tablets in Baddi last year because we did not have the Baddi factory. So that's a volume growth as well. From our existing factories, again, then it comes to seasonality. The ice creams have had a record volume as compared to the previous quarter as well as the previous year. Same thing with beverages. They've had a record volume as compared to previous quarter as well as previous year. So yeah, it's a combination of volumes as well as value. I'm really not sure on what information I can give you which can help you better analyze that number.
Maybe I can take this separately because I think I'm not able to put forth my question in clear way. But let me take this up separately. The third question is on the warrant issuance. We received about 60-70 crores last year, and some of those investors have sold some shares in the open market also. Now, what happens to those warrants? Are they still on in terms of full conversion?
Sure. I mean, that's the idea, right? I mean, we have the reason the secondary transaction has got nothing to do with the primary transaction. The primary transaction was done in the form of warrants because we were not sure of being able to deploy the entire sum of money right away, and we didn't want our ROEs to be depressed in the meantime. Even today, in spite of having deferred that money, we have nearly 70 crores, 70 or 75 crores lying in FDs, which has actually depressed our ROE numbers for this quarter. So the warrants issue has been done in the nature of warrants because we believe our requirement for capex will be spread out between the next 12 to 18 months. And that's the timing that we did as far as raising the money is concerned. Secondly, frankly, is not under the purview of our company anyway. So I am just unable to comment on that.
Sure. And the last one is, if I look at difference between your standalone numbers and consolidated, there are two odd subsidiaries which are fairly large here, or will become eventually also much larger in the scheme of things. But the margins there, if I look at the difference between standalone and consolidated, seem to be very volatile. And in fact, this quarter, despite that, the top line difference has almost doubled. Our EBITDA, difference is just about, versus 21 crores, it's about 27 crores. So if Mayank can help us understand this.
Yeah, while Mayank is doing his mental math as far as that is concerned, let me just quickly tell you from an operational perspective.
Yeah.
The structure is going to get a little complicated. We have some ice cream business in our subsidiary, which has a completely different margin profile vis-a-vis EBITDA as well as PBT, PAT.
Right.
Purely because the asset turns in the ice cream business are going to be much lower, and as a result, that number will not be comparable. We also have our shoe business, which has come into the subsidiary, and that's going to completely change the margin profile again, because that one is a shared manufacturing business, has extremely high asset turns, because it's a very labor-intensive business. Like Mayank was saying, we have nearly 4,000 odd people who have come on board, and that's going to change the margin profile as well. I don't think it would be right to look at it from that perspective, even within the subsidiaries, because ice cream is a seasonal business. If you look at it from quarter to quarter, the margin profiles will change. We have tried to explain that at a console level, saying that EBITDA has risen more than the PBT numbers because Baddi as well as the shoe business have not performed as well as they should have. We've also tried to inform that PAT is grown lower than PBT because the tax rate has increased. I would urge you not to split hair trying to get into the margin profile of, let's say, the ice cream or the shoe business. The shoe business, like I mentioned earlier as well, is something we will probably in the next couple of quarters come back and start looking at those numbers individually, because I don't know. I understand that as an analyst you might want more clarity about what's happening with the shoe business, especially since it's a very labor-intensive business and has very, very high asset turns, will have a completely different ROE profile as compared to our regular businesses. But give us some time to think about that.
Sure. But just some clarification in terms of numbers, Mayank, if you can later, help us, that would be great.
We will connect separately.
Sure. Sounds great.
A small answer that Baddi and beverages is in standalone. So all the reasons which we've given to the consolidated number apply to these numbers also, because there is a seasonality in the standalone and there is a Baddi which is underperformed, which is in the standalone. For the greater the discussion, we will connect on call separately. Yeah?
Sounds good. Thank you so much. I'm done.
Thank you. Our next question is from the line of Faisal from HG Hava. Please go ahead. Hello, Faisal, sir. Please go ahead, sir. Hello, Faisal, sir. The line from Faisal, sir, has been disconnected. As there are no further questions from the participants, I now hand the conference over to Mr. Vimal Solanki for closing comments.
Thank you. While we faced some integration challenges and operational delays, our commitment to strategic investments and the strength of our diversified portfolio have enabled us to achieve significant milestones this quarter. Private label business at HFL is important and remains a focus. It also helps our business development and R&D busy and charged. Unfortunately, in the overall space, it will remain insignificant. While both footwear and the OTC pharma are highlight categories at HFL, they are also the most complex businesses amongst all categories. So once the integration and ramping up is in place, I am certain they will get onto our press release headlines soon. I take this opportunity to thank everyone for joining on this call. I hope we have been able to address all your queries. For any further information, kindly get in touch with us or SGA, our investor relations advisors. And here, sending you a dose of patriotism from our family to yours this 15th of August. Jai Hind.
Thank you. On behalf of Hindustan Foods Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.